Despite all the uncertainty surrounding the second wave of COVID-19 and the fact that we're going into slower months of winter, the November Toronto Regional Real Estate Board stats still posted another month of record sales. So what's going on? What's happening? Should we buy now? Let's take a look back at 2020 and find out. Welcome back everyone, I'm Alan, broker and investor with Allen Law Real Estate, and today we'll be talking about some interesting things we're seeing in the Toronto real estate market amidst the COVID-19 pandemic. As always, don't forget to like and subscribe to make sure you get my latest video. At the onset of the pandemic, it seemed that the real estate market was impacted in a very negative way, particularly condos downtown. I have investments right downtown, and I've got a few great opportunities coming up as well in the near future that I really want to take advantage of. And as you know, hindsight is 2020, which is why I wanted to take a look back this year and see what happened. And what does that mean going forward? So if you're interested in finding out about what opportunities I'm talking about, please comment below or contact me and I'll get you some details. It's very easy to stay on the sidelines and say the market is going to, but I want to take a look at some of the trends and see what's really happening. So at the beginning of the pandemic, there was some offloading and the sentiment the market was heading into an uncertain future. Obviously, there was plenty of uncertainty in the middle of an unprecedented global pandemic. The confidence in the market was low as a result of travel restrictions, immigration and tourism, as well as other closures. There was almost an immediate drop in demand. Some speculators were caught when the pandemic hit. The dismal rental market as well as economic uncertainty caused a bit of short selling. But for the most part, the majority of investors were sitting tight. And like I've said before, don't try to time the market. Real estate is a long game. You gotta buy and hold. What happened and what's happening now is a short-term phenomenon because as of today, we can already see a different picture. As we're battling a second wave and going into the usual seasonal slowdown, the average sale price is still sitting around the same price as it was in February just before the lockdown. There was a bit of an exodus from the downtown core in March and April with the requirements to work from home because people started thinking, oh yeah, I can move out of the city, I can get a bit more space. The drive isn't so bad even if I have to go into the office once in a while. And then they started buying and looking at real estate outside of the city. Yeah, for some people, this will be a permanent choice, but for others, it's a short-term decision. And because they have to understand that for many people that made this move, they were planning to do it anyway. The lockdown was just a catalyst that expedited the process. Many millennials with growing families were outgrowing the space they had downtown. And it was difficult to move up because they were being priced out with the rising condo prices downtown. And right now, the vaccine is ready to go. And according to Goldman Sachs, 60% of the population in Canada could be vaccinated by summer 2021. Which means that we might start to see some return to normalcy by the fall of 2021. But again, you need to realize that when this happens, companies are going to start saying, okay, we need to get back to the office now, particularly in the downtown core. And even though we can argue that we have the technology easily to work from home, you can't deny the importance of face-to-face collaboration. Even just a few days ago, the Globe and Mail put out an article about how many Canadian employers won't continue to work from home flexibility after the pandemic. So this will be interesting to see how that plays out. And here's something really crucial as well. We need to take a look at historic real estate values. And as you know, over the last 25-30 years, the Toronto real estate values have been on an upward trajectory. Sure, there were some bumps along the way, but the trend is still upward over time. The Toronto real estate market, it's resilient. We've maintained stable upward trend despite a number of major market disruptions. From the dot-com crash in the late 90s to the early 2000s, right into the SARS pandemic. Then we get hit with the 2008 financial crisis, and now we're smack in the middle of this COVID-19 pandemic. But through all of these global catastrophes, Toronto real estate market has remained on an upward trend. Only time will tell what's going to happen in the post-COVID market, but if history is any indication, Toronto will remain resilient. Another thing I wanted to look at was, now we're in a period of historically low interest rates. Bank of Canada pledges interest rates unchanged at 0.25 until 2023, making it very cheap to borrow in the next few years. And your money won't be growing fast enough in the bank, so people will start to look at other asset classes to park their money, like real estate. Also, speaking of money, there's a lot of idle money sitting on the sidelines right now. We haven't been going out, we haven't been on vacation, The majority of us seriously cut down on our spending in the face of the uncertainty that we didn't know what was happening. But once things start to get better, that money will start to flow. Now, we certainly can't ignore immigration, a big driving force for real estate. You're going to see borders open up and immigration start to flow. Over the next few years, Canada needs to make up for the immigration that it lost this year and then some. And over the coming 3 years, Canada will aim to have the following levels of new permanent residents. In 2021, 401,000. 2022, 411,000. In 2023, 421,000. That's over 1.2 million new immigrants to Canada. And where do you think most of them are going to choose to make home? That's right, Toronto. Also, the borders reopening also means the return of international students, particularly U of T, Ryerson in the downtown core. There isn't enough student housing on campus, everyone knows that. And the schools aren't in the business of building residences. They're using their real estate for more lecture halls and research centers. Just think about how international students have been driving the demand of properties near the universities. Imagine for a moment as a parent, if your child is going to a foreign country to study alone, would you rather they have an hour or two commute to get to everything that they need, or live, work, and study all within the same area? Now here's the million-dollar question. Should we buy Toronto real estate now? And that depends. Do you think we're on the road to recovery and the Toronto real estate market will continue to show resilience? Or do you think the pandemic is a pivotal moment and that it's a turning point and it's the end of the downtown core as we know it? I mean, here's something that's going to be for sure. It's what the people on the sidelines are going to tell you. They're going to tell you the market is too hot. You shouldn't buy. It's way too high. We're in a bubble. Wait for it to come down. And then once it starts coming down, they're going to say, well, the market, we're not at the bottom yet. It's going further down. You shouldn't buy yet. Wait for the bottom. And if it's flat, oh, there's too much uncertainty. You should wait and see. I mean, if you don't want to miss the boat, you got to get some skin in the game whenever you can and then play for the long term. I have investments downtown. I'm not betting against the core. I'm looking for new opportunities and I'm going to hold for the long run. But I want to hear from you. What do you guys think? Please comment below, contact me at broker@allenlaw.ca or call me 905-604-1010. And always don't forget to like and subscribe. Thank you again for watching.